Thank you for joining RealEstateSINY.com's weekly mortgage and economics segment. I'm Samantha Goodhart, filling in for Megan Abdelaziz, RealEstateSINY.com's mortgage and economics reporter. The mortgage rates took another slight stumble down this week. The 30-year fixed rate fell to 4.54%, the 15-year fixed rate fell to 3.61%, and the 5-year adjustable rate fell to 3.54%. The mortgage rates continued to fall this week due to the fact that there was nothing too big in the news that could have had a significant impact. However, that didn't stop the economic data from being released on the housing market. Two reports we looked at were on June's existing home sales and June's new residential sales, both released this past week. The National Association of Realtors released their June existing home sales report on Monday, July 22nd. According to the report, sales had fallen to 5.08 million in June for existing home sales being sold nationally. This may be down 1.2% from what we saw in May, but it is 15.2% higher than it was a year ago. The national median existing home sale price was at $214,200 in June, an increase from May's $208,000 median. At the end of June, there were 2.19 million existing homes on the market nationally. This is 1.9% higher than we saw in May, but 7.6% lower than we saw last June. A couple of days later, on Wednesday, July 24th, the United States Census Bureau and the Department of Housing and Urban Development released their report on new residential sales in June. The data shows that there were 8.3% more new single-family homes being sold in June than there were in May, which sort of makes up for the drop in existing home sales. These new single-family home sales were also up 38.1% from June of 2012. The median price for new single-family homes being sold had dropped this month from $262,900 in May to $249,700 in June. The average price had also dropped from $307,800 in May to $295,000 in June. As for the amount of new single-family homes that were on the market nationally by the end of June, the number had remained unchanged from May at 161,000. The financial markets had been improving throughout the week, but by Wednesday they had lost their momentum. The Dow Jones started off at about 15,465 on Thursday, July 18th. It had increased to about 15,576 by opening on Wednesday, July 24th, but had closed that same day at about 15,542. The S&P 500 had similar movement. It had opened on Thursday, July 18th at about 1,681, and it continued to increase to about 1,696 by opening on Wednesday, July 24th. But it also closed that same day at about 1,685. As for the 10-year U.S. Treasury bond yield, it had dropped from the 2.56% it was at on Thursday, July 18th, to 2.50% for Friday and Monday. It had gone back up, however, on Wednesday, July 24th, to 2.61%. After checking out the newly released economic data and the financial markets, we looked to Gallup.com to see how Americans feel about our country. This week, two reports were released by Gallup.com, one on the U.S. satisfaction and the other on Americans' confidence in the economy. Gallup.com's report on Americans' satisfaction in the United States was released on Thursday, July 18th. The report is based off of a survey that had been conducted between July 10th and July 14th. The results came back with 28% of the polled Americans feeling satisfied with the way things are going in the United States, but 68% felt unsatisfied. From this survey, Gallup.com concluded that Americans aren't too happy with the way Congress is handling situations, and they aren't confident enough in the economic data being released. Gallup.com released their updated Economic Confidence Index on Tuesday, July 23rd. The results of the two polls they took for the week beginning July 15th and ending July 21st came in just about the same as the prior week. Americans' net ratings of economic outlook had just a slight change in the amount of people who think the economy is getting worse. The results showed that 43% of Americans think that the economy is getting better, but 52% think that it's getting worse. Last week, however, 53% thought that the economy would be getting worse. The results of Gallup.com's poll on Americans' net ratings of current economic conditions came in the same as the week before. 19% of Americans think the economic conditions are good or excellent, while 33% think that they are poor. Without much change in the results of these two polls, Gallup.com's weekly economic confidence index had remained unchanged at negative 12%. The last thing we looked at this week was the weekly application survey released by the Mortgage Bankers Association on Wednesday, July 24th. For the week ending July 19th, the amount of mortgage applications being applied for had decreased. The Mortgage Bankers Association's Market Composite Index had dropped another 1.2%, along with their refinance index, which had dropped another 1%. The refinance shares of mortgage applications that came in that week had remained unchanged from the prior week, at 63%. The economy seems to be the biggest issue in the United States, and the president sees this as well. President Barack Obama will be going around the country making speeches about the economy and offering ideas as to how he can make it better in the long run, which will hopefully get Congress in the right direction too. We can only hope that we will see things pick up a little in the coming weeks. For next week, the Federal Open Market Committee will be meeting on Tuesday and Wednesday, July 30th and 31st, to talk about the monetary policy. The mortgage rates should shift accordingly, with what is said in the statement after the meeting. Be sure to check back with us at trendingsiny.com and join Megan Abdelaziz here on YouTube to see where the mortgage rates will go next. Thank you for watching, and be sure to like us on Facebook, follow us on Google+, subscribe to our YouTube channel, and follow our blog at trendingsiny.com. Once again, this is Samantha Goodhart with realestatesiny.com.